Hello everyone, welcome you all to today's class. I welcome you all to today's class. My name is Prateek Taldar. By qualification, I'm a chartered accountant. So, how many new joinees in today's class? We are going to discuss about the RBI circulars, MCQs on the RBI circulars related to January 2025, and this is the part first, right? So, what the structure will be, we are going to discuss about the MCQs first, and then I'll be teaching you the concepts as well. Okay. So that's going to be a rough structure about everything, and you can always ask your doubts as well in the comment section. So guys, RBI circulars are very crucial for your examination. Okay, they are having a great amount of weightage also in your examination, and one of the most complex thing in which the students face difficulties, right? considering the length of that RBI circular, but it's always crucial to know that what to study from the circular and what not to study, right? So we'll be learning in such an approach that I'll be also teaching you what to study, what not to study. Plus, we'll be doing a lot of MCQs around these topics so that if any kind of fear factor is there in your mind related to RBI circulars, then we should eliminate that fear factor timely, right? Because there's nothing to fear as such. The circulars are very interesting. When we see it in a lengthy PDF form or on the RBI website, then definitely it can be challenging. But when we summarize it, we understand the concepts well enough. They are interesting. Okay, and even if you don't feel like studying the summary notes, what you can do, guys, is you can quickly refer to the MCQs and you can revise everything in a MCQ based approach as well. And that I suggest you that 1 day or 2 days before the examination, just try to finish this topic. If you do have short notes, then well, that's the best thing. If you don't have it, you can have a quick MCQ based revision. I have seen multiple students preparing for these circulars. Always they kind of, they try to read each and everything. Now that won't be exam oriented, right? In the examination, you will be getting the MCQs. You need to solve those MCQs. So understanding of how question can come, what kind of question can come is also crucial, right? So in these classes, we'll be having a mix of both concept as well as the MCQs, okay? So let's start today's discussion on the January 2025 circulars, guys. So what we will do is I'll be reading the question and I'll be giving you time as well. I request everyone to please be participative. If you know the answer, comment in the comment section. And if you don't know the answer, or even if you want to guess it, you can do it. Definitely, there is no negative marking in the classes, right? It's there in the examination, but as of now, I will encourage you to be participative. Okay? So everyone has to give his or her opinion in the comment section. That's very, very critical. That's compulsory. Okay? The first question, AIFI are a group of financial regulatory bodies in India that play a crucial role in the financial markets. These institutions include both public as well as private sector banks, development finance institution, and other financial intermediaries. They provide a wide range of financial services and play a key role in facilitating the economic growth and financial stability. Which of the following is not an AIFI? The options are here in front of you. Which of the following is not an AIFI? What is AIFI? All India Financial Institutions. All India Financial Institutions. So we are having 5 AIFI notified in India. Which one of the following is not an AIFI? What do you think, guys? What should be the correct choice here? What should be the correct choice here? Look, it's a very straight and simple question. If you know the concept of AIFI, you can easily answer this question. The correct choice here is option D, IDBI, right? So we are having 5 AIFI in India: NaBFID, EXIM, SIDBI, and NABARD, right? So we are having 5 AIFI in India. IDBI is not at all an AIFI. IDBI is not an All India Financial Institution. Next is, which of the following statement about AIFI is not correct? Which of the following statement is incorrect if we talk about the AIFI? First one is AIFI can accept the public deposit. Second one is AIFI are regulated by the RBI. AIFI focus on long-term financing for sectors like infrastructure and MSME. AIFI rely on market borrowings, government funding, and RBI refinancing, or they are a group composed of financial regulatory bodies that play a pivotal role in the financial markets. So, what should be the correct choice as per your understanding? What should be the correct answer here? The correct answer here will be AIFI cannot accept the public deposit, right? So this statement is false that AIFI can accept public deposit. That's false. Next is AIFI are specialized financial entities regulated by the RBI. At present, there are 5 institutions that are designated as All India Financial Institution. We have already discussed that. They primarily engage in the financing for sectors such as infrastructure, housing, agriculture, and exports. Which of the following characteristic would most likely distinguish AIFI from commercial banks? How they are different? Which one is the most closely associated? Which one is the most visible difference here between a AIFI and a commercial bank? The correct answer here is option C, heavy reliance on capital market and RBI refinancing. Now that's the case of AIFI, right? They rely on heavy reliance on the they do have reliance heavy reliance on the capital markets and the RBI refinancing. Under which section of the RBI 1934 is NaBFID regulated and supervised? So AIFIs are basically regulated in which particular section of the RBI Act? Under which section of the RBI Act 1934 is NaBFID regulated and supervised? The correct answer here is option B, 45L and 45N. Okay, so NaBFID is regulated and supervised under section 45L and 45N of the RBI Act 1934. Okay, what is the financial contract called where buyer pays a premium to the seller? So here the buyer is paying premium to the seller for, and the seller is offering what? A protection against the credit risk. The seller is offering protection against the credit risk, right? And the buyer is paying the premium. What kind of arrangement is this? Anyone in the comment section? What kind of arrangement is this? This is called as credit default swap, right? Credit default swap. We'll be discussing about what credit default swap is all about very soon. So the National Bank for Financing Infrastructure and Development, NaBFID, a development financial institution which was established in 2021 in India to support the infrastructure financing. Its primary goal is to address long-term infrastructure financing need, develop bond and derivative market, and boost the sustainable economic growth. NaBFID can now participate in the financial markets regulated by RBI. Which of the following financial activity it is allowed to undertake as of now after the circular which came in January 2025? Options are credit default swap, repo transactions, open market operation transactions, both A and B and both A and C. What should be the correct choice here, guys? Everyone in the comment section, what's your opinion? The correct choice here is, guys, option C, both A and B, credit default swap and repo transaction. So after the market master direction that came into existence recently in January 2025, NaBFID can engage in both CDS and repo transactions because all the AIFIs are capable of doing that, right? So these all the MCQs are from the notification participation of NaBFID as an AIFI in the financial market. It came on 1st of January 2025. Let me just give you a quick background. NaBFID means National Bank for Financing and Agriculture Infrastructure Development. It's an all India financial institution, right? Regulated and supervised under the RBI section 45L and 45N of the RBI Act. AIFI क्या होते हैं? They are specialized financial institutions. What they are? Specialized financial institutions that are regulated and supervised by the Reserve Bank of India. Specialized financial institution means their focus area is on some or the other areas of development. It can be infrastructure, as the case of NaBFID, agriculture, NABARD, housing, NHB, exports, Exim Bank, and MSME, SIDB, right? So these are the 5 AIFI, Exim, NABARD, NHB, SIDB, and NaBFID. These are the 5 AIFI which are there in India. If I talk about the NaBFID, then it established in April 2021 under the NaBFID Act 2021. लॉन्ग टर्म इंफ्रास्ट्रक्चर फाइनेंसिंग पे काम करता है, हेड ऑफिस है मुंबई में, एंड एमडी इज मिस्टर राज किरण राय एज ऑफ नाउ. ओके, so participation of NaBFID as an AIFI in the financial market, these are the directions which clearly specify that AIFI can undertake the credit default swap and repo transactions. Now if AIFIs are permitted, then NaBFID is also one of the AIFI, so it's just a clarification that NaBFID can also participate in the financial markets, in the repo, in the CDS as well, credit default swap as well, so it's effective immediately, right? So it's more of a kind of clarification in nature. Key financial concept, what do you mean by credit default swap? Let's quickly have a discussion related to credit default swap, and then I'll be walking you through an example also. It's a financial contract where the buyer pays premium to the seller for protection against the default risk. So the buyer here is paying premium to the seller for protection against the default risk. It's nothing but it's acting as an insurance only. Okay, let's suppose bank A. Let's take a practical example and then try to understand this situation. Bank A has lent 100 crore to company X, that too for 5 years. Now bank A is kind of skeptical that whether company X will be repaying him back the money or not, right? So bank A is here skeptical. So in order to protect this risk, this is a kind of credit risk that the borrower will default. This is a credit risk, right? In order to cover this risk, bank A entered into a credit default swap with investor B. So bank A will be paying premium to investor B, and in return investor B will assure bank A, Mr. B, the investor B will be assuring bank A that in case company X defaults, he will make good. He will protect against such kind of default, right? So that's a kind of agreement. So here the bank A is protecting itself from the default risk, right? So this is a normal CDS agreement, credit default swap. Participation of NaBFID and AIFI. So repo transaction, what do you mean by repo transaction? It's a short-term borrowing method where the securities are sold with an agreement to repurchase them at a later and a higher price, obviously. So let's suppose A and B are banks. What A can do here is A can give the securities to bank B, right? And in return, B will be giving a loan X amount to bank A, right? At the same time, A will do an agreement to repurchase these securities back. That's why we call it as a repo, repurchase agreement, right? Repurchase agreement. So it's a secured loan with securities as collateral here, right? It's a secured loan with securities as collateral here. Now let's come back to the MCQs. Next MCQ is the lead bank scheme, which was introduced by RBI in 1969. Recently, with the creation of Meluri district in the Nagaland, a new assignment under the scheme has been made without altering the lead banks for existing district. Which of the following is not correct regarding the lead bank scheme? Which of the following is not correct regarding the lead bank scheme? Options are in front of you. Read them quickly and do let me know what's the correct choice here. What should be the correct choice here? The correct choice here is, guys, option B. It assigns multiple lead banks to a single district. That's not correct, right? We need to identify the incorrect statement, and this is the one which is incorrect. यहाँ पे एक बैंक, यहाँ पे मल्टीपल लीड्स नहीं असाइन होते, वन लीड फॉर वन डिस्ट्रिक्ट असाइन होता है, राइट? Under the lead bank scheme, who chairs the block level bankers committee? So this is related to the lead bank wala circular. Under the lead bank scheme, who chairs the block level bankers committee? And the correct choice here is lead district manager. Which of the following committee under the lead bank scheme is chaired by the district collector and involves participation of the MPs and MLAs as well? The correct choice here is DLDC, District Level Review Committee. Okay. Next is, which of the following are key members of District Consultative Committee, DCC? Option A, Bank, NABARD and Government Department. Option B, Bank, Jilla Parishad Chief, MPs, Banks, RBI, SLBC, RBI, SEBI Stock Exchanges, or Panchayat Secretaries and Sarpanchs. The correct choice is option A, Bank, NABARD and Government Departments. In large and diverse economies, effective coordination between the financial institutions and local administration is crucial for ensuring the inclusive economic development. Structured framework and designated institutional responsibilities help bridge gap in the financial access, promote regional growth and align banking services with the broader policy objectives. Under the lead bank scheme, while the majority of lead bank responsibilities are assigned to the public sector banks, some of the private sector banks has also been entrusted with this kind of role. Which of the following private sector banks have been assigned the lead bank responsibility as of 31st March 2025? What should be the correct choice here, guys? Everyone in the comment section. The correct choice here is, guys, Jammu and Kashmir Bank and ICICI Bank. So they have been appointed as lead banks, right? They are the only two banks who have been appointed as the lead banks as of now. So you can see here that this circular is dated on as 2nd of January 2025. Formation of a new district in the state of Nagaland. Assignment of the lead bank responsibility, right? So we have appointed State Bank of India here for this particular newly created district. Okay. So majorly you should be aware of the concept of lead bank and all, right? Baki, this particular circular is not so important. Okay. So each district is assigned a lead bank to coordinate the credit flow for agriculture, MSMEs and economic activity. So they are basically coordinating the entire flow of credit for all the sectors here, right? Next is RBI has launched a platform that enhances the transparency, efficiency, and real-time settlement capabilities, forming the technological backbone of many RBI critical financial operations. What is e-Kuber in the context of RBI is all about? So this particular question is related to e-Kuber. So e-Kuber is basically a CBS platform for the government transactions, right? So government payments, auctions of government securities and sovereign gold bonds, everything is there on the e-Kuber platform. So this particular circular came on 3rd of January 2025, status of 30th March for government transactions through integration with e-Kuber. It's a CBS system core banking solution of RBI, enables each bank to connect their single current account across the country. It manages government transactions as we discussed. Applicability is on the all agency banks, right? Now it does not process any government transaction on global holidays. However, 30th March is also falling on Sunday. Still, this particular system to be operational. Why? Because government wants to ensure that the receipts and payment of financial year 2024-2025 are accounted for in the same financial year. There is no kind of overlap. We all know that financial year is 1st April 2024. That's the start date, to 31st March 2025. As 30th March is a holiday because of Sunday, still this particular platform will be operational, right? So that there can be proper accounting. There's no overlap. Okay. So the Office of Comptroller General of Accounts, Government of India has advised that on account for all the government transactions relating to receipts and payment of the financial year 24-25 itself, and not to overlap with the following financial year. Okay. Next, regulatory framework in the financial sector are often structured to cover multiple stakeholders, including the data providers, intermediaries, and end users. By establishing comprehensive compliance requirements, regulators aim to strengthen the systematic transparency, promote responsible practice, and ensure the efficient market function. The RBI Master Direction related to Credit Information Reporting Directions 2025 are applicable to which of the following entity? Now, this particular direction is very crucial for your examination. Okay. So, the important things I always try to cover in a more detailed manner. So, you'll be having a good amount of discussion on this particular circular. What should be the correct choice here? Is it applicable on commercial banks and NBFCs, CICs, CI and CICs, commercial banks, NBFCs and AIFIs? What should be the correct choice here? The correct answer here is, guys, option D, CI and CIC. CI means credit institution and CIC means credit information companies. Okay, we'll be having a good amount of discussion on these two topics as well, this particular circular as well. Next is, a well-functioning financial system relies heavily on the quality and reliability of the information shared among its participants. When information flows are structured and consistent, it promotes the confidence, supports better decision making, and enhances the overall market stability. In contrast, fragmented or inconsistent information sharing can lead to inefficiencies, misunderstanding, and potential systemic challenges. Why it is important to establish framework for credit information reporting in the financial system. Option A, to enable diverse borrower profiling and customized lending models. Option B, to allow flexible borrowers profiling based on the lender preferences. Option C, to strengthen trust among the financial system participants and better risk assessment. Option D, to optimize innovation in designing alternate credit scoring methods and effective risk management. And option E, to reduce the cost of debt issuance in the financial system. Right? Here, the correct answer will be option C, to strengthen the trust among the financial participants and better risk assessment. That's why we need clear information reporting, right? That's the sole purpose of standardization. CICs, credit information companies, are specialized institutions. Their role include compiling data of individuals and businesses, aligning worthiness scores, and enabling the standardized information disseminating across lenders and other stakeholders. Which of the following action falls directly within the functional mandate of CIC? What should be the correct choice here? The correct choice here is, guys, option C, maintaining centralized records of borrowers' credit performance. That falls under the directly functional mandate of CIC, credit information companies. Okay. In a rapidly evolving financial ecosystem, the regulatory framework serve as a critical anchors that promote stability, protect the consumer interest, and define operational boundaries for the institutions. Clear legislation helps ensure consistency in operations, transparency in dealing, and accountability among the financial market participants. Which legislation governs the licensing of CICs in India? Which one is the legislation which are governing the licensing of the credit information companies in India, guys? The correct choice here is CICRA, which is Credit Information Companies Regulation Act 2005, which governs the CIC. Please do remember that. Specialized financial institutions play a vital role in supporting the broader economy by offering a niche services such as credit reporting, refinancing, development financing, and credit in evaluation. Each institution operates with a regulatory framework tailored to its unique objectives, contributing in a different way to financial stability and economic growth. Which of the following is not a RBI registered credit information company? The correct choice here is, guys, option E, NaBH. Rest all are the credit information companies only. Next is, what is the range of credit scores generally provided in India as per the credit information reporting framework? What is the range of credit scores generally provided in India as per the credit information reporting framework? That's quite easy. 0 to 500, 300 to 900, 100 to 700, 200 to 800, or 400 to 1000. What should be the correct choice here, guys? The correct choice here is option B, 300 to 900, right? Now, regulators worldwide are increasingly focusing on the data governance frameworks to ensure the accuracy, completeness, timeliness of information flows between the institutions, and RBI has introduced a DQI for CIC for making accurate evaluations submitted. Which of the following is true about the DQI? इनमें से क्या सही है DQI के बारे में? अच्छा, do you guys know the full form of DQI? Do you guys are aware of the full form of DQI? Option 8 measures accuracy of information submitted by the financial institutions. It tracks quality performance of funds submitted by the credit institutions. It assesses the quality of credit information submitted by the credit institutions. It measures authenticity, accuracy of loan information submitted by the financial institutions. Option E, it audits the information submitted by the financial institution. What should be the correct choice here? What should be the correct choice here? The correct option here is option C. It assesses the quality of credit information submitted by the credit institutions. ठीक है? That's the correct choice. Option C here. Next is what is required of asset reconstruction companies regarding membership of the CICs, credit information companies, according to the revised RBI guidelines. Become a member of at least one CIC, become a member of at least two CIC, become a member of at least three CIC. ARCs are not required to become a member of CIC, any CIC, or become a member of all the CICs. So what should be the correct choice here? The correct choice here is, guys, option E, become a member of all CICs. So ARCs are now required to take the membership of all the credit information companies, and not just 1, 2, 3, but all of them, right? What is the mandatory frequency for asset reconstruction companies to update their information they collect or maintain with credit information companies as per the revised RBI guidelines? Mandated frequency for ARCs to update the information they collect or maintain with their credit information companies as per the revised RBI guidelines. The correct choice here is, guys, option C, fortnightly. Fortnightly, right? Fortnightly basis is the correct choice here. Membership and participation framework are common across the various financial sectors to formalize the relationship between institutions and specialized service providers. These framework often involve defined processes, eligibility criteria, and prescribed changes, ensuring consistency and fairness in how participants engage with critical financial infrastructure. What is the one-time membership fees that CICs can charge credit institutions for joining? What is the one-time membership fees that CICs can charge credit institutions for joining. What are the prescribed charges basically? The correct answer here is, guys, option B, 10,000. One time membership fees is 10,000. Acha, we discussed about the annual membership fees, right? 10,000. What was that 5,000 all about? What is the annual membership fees which must pay to each credit? Okay, I need to check this one question. Okay, we need to check this particular question. Let's ignore it as of now. We'll be reading it directly in the circular when I'm discussing about the circular. Under the strengthened grievance and redressal framework, all major CICs and credit institutions must appoint internal ombudsmen. Further compensation mechanism exists for customers if credit information disputes are not resolved within the specified timelines. What compensation is a customer entitled to if credit institutions fails to update their credit information within 30 days of a complaint? What will be the consequences? The correct choice here is, guys, option B, 100 per day. Next is standardization plays a critical role in maintaining the integrity and comparability of information across different sectors of the financial system. By introducing uniform data formats and clear reporting framework, regulators aim to enhance their data consistency, improves analytical outcome, and support the better decision making by stakeholders at all the level. Under the master directions of credit information reporting, a uniform credit reporting framework is there, UCRF, introduced by the RBI to ensure consistency in reporting by the CIs to CICs. So CI needs to report to CICs in a uniform credit reporting format. Across which of the following segments? So what kind of segments do CI is required to report to the CICs in a standardized format? What's your opinion? What do you think, guys? Here the correct choice here is option D, consumer segment, commercial segment, and microfinance segment. So that's the correct choice here. Okay, guys. As per the RBI Master Direction on Credit Information Reporting, within how many calendar days from the end of the reporting period must the credit institution submit updated credit information to the CIC? In how many calendar days from the end of the reporting period? रिपोर्टिंग पीरियड का एंड हो गया तो यहां से कितने कैलेंडर डेज के अंदर the CI needs to send the updated credit information to the CIC? What should be the correct choice here? The correct answer here is, guys, option D, 7 calendar days. Okay. So we just discussed MCQs related to the Master Directions Reserve Bank of India Credit Information Reporting 2025, right? So RBI, in exercise of the power conferred under the section 11 of Credit Information Companies Act. So there is an entire act which is Credit Information Act, Regulations Act 2005, right? Section 11 gives power to the RBI to make such kind of rules. The provision is applicable on credit institutions and credit information companies. Credit institutions and credit information companies. So credit institutions are those entities which are offering credit, right? Like financial institutions. And if I talk about credit information companies, there are some limited companies that are collecting information related to credit. So we will be discussing about all the things in this particular circular. This circular came into existence to standardize the framework for credit information reporting. So earlier, every CI reports to CIC in non-standardized format. So this is a standardized framework in which the CIs needs to, all the CIs needs to report to CICs, right? So there are a lot of definitions which are given in this particular circular. If I talk about credit information companies, then they collect and maintain credit histories of individuals and business. Let's suppose you have taken a loan from HDFC Bank. HDFC Bank is a credit institution. He'll be furnishing all the credit history related to you or your business to the credit information companies, right? And that's how it works. So they do have information related to credit histories of individuals and businesses, right? Licensed by RBI under the CICRA 2005, provide the credit information report and credit scores which are in the range of 300 to 900. Okay, here is a list of all the CICs which are there. Okay, so these are all the RBI registered CICs as of now. If I talk about what is a credit institution, then it's a wider term. It includes banks, commercial banks, primary cooperative societies, state cooperative societies, central cooperative society. When I talk about commercial bank, it is inclusive of everything, whether it's small finance bank, local area bank, rural bank, but excluding the payment bank. Why excluding the payment bank? Because they usually don't offer the credit. They don't offer any kind of credit facilities, right? So it's better to exclude them. It makes no sense to include them. They can't offer credit, right? All India financial institutions, so all the 5 All India financial institutions are part of credit institutions here. Okay. All the NBFCs and all the asset reconstruction companies, do remember housing finance companies are also included in the NBFCs, right? So this is the definition of credit institutions here, right? So we have learned about credit information companies, we have learned about credit institutions. So what really happens is individuals and businesses are taking loan from credit institutions like banks, like AIFI, NBFCs, asset reconstruction companies. They are again providing all the information related to those individuals and businesses to credit information companies. And what credit information companies are doing? They are collecting and maintaining the credit histories, right? If I talk about the membership, then all credit institution must become members of every CIC registered with the RBI. So here we are having these 4 CICs that are registered with the RBI. So all the credit institutions must become member of every CIC here that are registered with the RBI. Membership fees, there is a membership fees as well. 10,000 is one-time membership fees and 5,000 is the annual membership fees, right? So annual membership fees is 5,000 rupees and one-time membership fees is 10,000 rupees. There are standardized reporting formats that we discussed. We call it UCRF, Uniform Credit Reporting Format. So credit information by CIs to the CICs must be in uniform credit reporting format. ऐसा नहीं कि आप किसी भी format में दे दो. There is a standardized format of it, and you need to supply the data as per the consumer segment, commercial segment, and microfinance segment. Right? So in 3 segments you need to furnish the data. Form 1 relates to the consumer segment, Form 2 relates to the commercial segment, and Form 3 relates to the microfinance segment. Frequency, so credit institutions need to update the data fortnightly, right? So this particular circular is important for the examination. Study it in detail. That's why we are studying it in detailed manner. The submission deadline is 7 calendar days from the end of the reporting period, right? There's a concept of data quality index as well. So what's data quality index? CICs will evaluate the accuracy and completeness of data provided by the credit institution. So if a credit institution has provided data to CICs, they need to evaluate whether the data is accurate, whether the data is complete, right? Poor data quality may result in penalties and corrective measures imposed by RBI. So if you are providing a poor data, then definitely RBI can impose penalties and also can take corrective measures on it, right? So there are a few things related to DQI as well. So basically how to compute the DQI, you need to compute it on a monthly basis, right? NCIC shall provide reasons for decline in score to each CI. If there is any kind of decline in the score, DQI score of any kind of CI, right? Then CIC needs to provide reasons for such a decline. Why CIC will provide? Because CIC has itself computed that particular data, right? So CIC can definitely comment on the data. So for the credit score, we have already discussed that it's ranging around 300 to 900. Sharing of information with third parties entities based on the consent of individuals. You can share the information with third parties, but a consent of individual is required, and CISA certified auditor needs to be appointed by the entity. Who are CISA certified auditors? Basically, they are system auditors, right? They audit your system. They first audit your system and provide an assurance that your system is processing each and every transaction correctly and your internal controls related to your system are perfectly in order, right? Once this assurance is there, you can have an auditor who has assured that your system is fine, right? And then you can share the data with the third parties. CISA, certified auditor. Audit is compulsory in such kind of cases. There is a rectification mechanism as well. If CICs and CI have clear processes to resolve error in their credit reports, if there is any kind of error, then there should be a clear process which is already mentioned, right? Display of information by the CI. So CI needs to clearly display the information on the website, right? Which are secured creditors in the SARFAESI Act 2002. They need to clearly display the information on the website. Borrower whose assets are secured have been taken into possession by the CI under the SARFAESI Act, and that too, they should be updated on a monthly basis, right? So I think, guys, broadly we have covered each and everything. There is a compensation for delay as well. So we have covered all the MCQs related to the circular, and we have covered the circular also, right? So that's how we are going to proceed in this particular class. We'll be doing a lot of MCQs. We'll be discussing first the MCQs, and then I'll be also clearing your concepts related to this circulars, right? And this particular 100 rupee per day penalty, we have already discussed that thing, right? Okay, and then we are having key benefits and guidelines. That's fine. We have covered almost everything from the circulars that we have discussed today. We have covered all the 360 angle of questions that can come up, right? So that's it from my end, guys. If you have any question, you can always drop me in the comment section in the coming classes also, right? Feel free to interact anytime. Thank you so much for watching today's lecture. See you soon in the next class, and keep practicing, keep revising, right? Keep practicing, keep revising. Otherwise, the circulars ka portion is very, very big, right? Revision is the only way जिससे कि आपको यहाँ पे consistently याद रह पाएगा, right? Okay, and try to solve as many MCQs as possible, and that's what the sole purpose of this class is. Okay, guys, thank you so much. Take care. Bye bye.